Good morning, ladies and gentlemen. This is Dave with David Worrell YouTube. We got the whole crew in the Discord right now. So what we're going to do is show you how we do our morning opens. In case you want to be a part of this Discord, we are a beautiful collective where we give each other and myself. We run through basically the whole morning. We go through the same spiel every morning, so that way we can set up and make sure we all have a better understanding of what's going on in the overall market. If that sounds awesome to you, hit that like, hit that subscribe button, join our Discord. It's absolutely free. We got a free basic course coming out soon, so you know exactly the strategies that we trade and exactly how we like to keep an eye on the market, so we know better what direction we're headed. So good morning, guys. Good morning. It's good to see you. All right, we're just going to run through this real quick. As you guys like to know, I always start with the S&P 500. We talked yesterday about holding that $500 level. Not only is it psychological, but we do have some resistance down here. That resistance was previous day. It came down. It almost broke through that 500, and then it got soaked right back up within like 20 or 30 pennies. So it was really nice to see that actually hold out here. And then, of course, across the indices, you can see that we're all moving about the same. So if you look at the SPY, you look at the QQQ, you know, everything's looking the same. The IWM's actually looking stronger, which is entirely different than the past year. The IWM is looking stronger than the rest of the indices right now, above a 21-day moving average. But when I say strong, I'm talking short-term strong. I'm not talking long-term. Long-term strong, it's still down. So let's run through all these so we have a better understanding of what's going on. Guys, what I'm going to do is I'm going to blow this up. This is your daily time chart. Our whole objective when we're looking at all of these is we want to be above these moving averages. Why do I say that? These moving averages that we use are the 200-day moving average. That's my first line in the sand. Then we have the 50, the 30, the 21, and the 10. Now, you can use whatever ones you want. It's not ideal. You can use whatever moving averages you want. These are the ones that I use because I follow Investors Business Daily. Those are all the market winners that I've learned from, that I've followed, that I've taken and mirrored strategies from. You don't have to use these, okay? But these are what I use. These are the metrics I use to help understand and digest the information the market's giving me. We have been on this uptrend, and we use this thicker 21-day moving average as the ideal area of support. See, we break above that 21-day moving average. We came back down much, much later. About 3 months later, we retested higher, retested higher. And you see the dynamic of this 21-day moving average. Now, if you were here with me in the Discord, which I'm pretty sure each one of you that is in the Discord right now, you were with me when I talked about this break of the 21-day moving average. Okay? We talked about this break of the 21-day moving average. This is the same day that I actually called my my financial advisor. I said, I need you to pull me out. I need you to protect my capital. Because when you see a hammer candle like this, there's something very serious going on in the market. A big sell-off, a big distribution day when we popped up, got near all-time highs, and then just sold off this big, this fast. So I wanted to get hands off until we got above the 21-day moving average. When we did get above the 21-day moving average, we kind of waited this out. We wanted to see if it was going to make new higher lows, and it did not. It pushed up, it pulled right back down, it pushed up, and then it sold off this bloody 6-day sell-off that I bring up to you guys all the time. Now, all the way down here, I was expecting a bounce, expecting a bounce. We didn't get that bounce. We got small bounces before we sold off harder, and we made money in the short-term downtrend, shorting on a daily time frame, intraday, which I don't recommend anybody trying to do. It's hard to short. It's hard to play day trades regardless. Here we like to do swing trades, but when we pull back long and hard like this, I like to take those shorts. So this thing started to pop back up. We finally got that push, and we prepared everybody in here. If you guys remember, I talked about this 50-day moving average time and time and time again, right? And we finally got it. We got that 50-day moving average, and then we pulled right back down. Well, in the midst of all of that, so now we're all caught up. In the midst of all of that, we could see that we were trying to make new higher lows. So these new higher lows, we have this low, we have one new higher low, and I'd like to see one more new higher low. Well, where is that new higher low going to be? Well, we don't know yet. So what happens when we pull back up to this 50-day moving average and we come back down? We're looking for an area of support. My area of support, my line in the sand before I felt like we were going to come down sooner, was this $500 area, okay? This $500 area, which I marked out in gray, I kept calling it the murky waters, right? So once we got down to these murky waters, we wanted to see it hold support. Now, if you guys remember yesterday, I got a little tripped up. I got a little excited as they were coming down. I wanted to short Netflix. I took a small short in Netflix. I think I lost, $50 or $100 trying to short Netflix. I didn't stick to my game plan. My game plan was we are to pull back, retest this 500, and then take off. Once I finally seen this retest, I got stop out of Netflix. That's when we switched to the long side, and we ended up grabbing longs. Let me look at the current account in Tesla, Nvidia. We're holding RDNT and Abercrombie and Fitch. Now, Abercrombie and Fitch, I got out by the end of the night, so I will be looking at this for a continuation. You guys can see right here, this is the daily downtrend on Abercrombie and Fitch. If we can make, I wouldn't even mind if we pulled back a little bit before we took off again and me catching this area one more time. But I did not want to hold this. I had a bad fill, to be quite honest. I had a bad fill. When I clicked that button, I was down because I did a new mistake and I bought market order. Don't ever do that. I bought market order because we were about right here. I was worried that we were going to miss it. When I hit market order, I was down about $20 just by the click of a button. It was really dumb. So once we got up to here, I sold half of my shares, about 100 shares. Sold half my shares. When it came back down, I broke even. So I made like $20 on Abercrombie and Fitch. So it looks like I'm the one buying coffee this morning, whatever. But now I want to go back. Let's revert back to the mean here. The S&P 500 is still below that 21-day moving average. But let me put this into perspective. After Apple earnings yesterday, look at this, guys. We are right at that 21-day moving average again. Now, is it going to act as resistance here? I would love to say no. I would love to be able to know exactly what's going to happen. And if I knew exactly what was going to happen, I would be filthy freaking rich, right? We would all be on a yacht trading right now. But we're not, okay? In reality, nobody actually knows what's going to happen. But if we use technical analysis, we can at least get a better idea. So we've had a big push yesterday. It's not like out of the ordinary push, right? So like if we measure off these lows and we come to its closing trading price, it's moving in average. So the average daily range is 1.2%. It moved that average daily range of 1.2%. Okay, it was on volume, but not greater volume. So what I would like to see, which probably won't happen on a Friday, but I've seen it before. I've seen crazier things happen before. I'd love to see a push today on higher volume, getting us back up at least under this 50-day moving average. So let's see if that's even plausible. No. It would be more plausible. Of course, it is plausible. We could, but I think it is in better line of sight to get up and hold above that 21-day moving average. I don't think we're going to get up to the 50-day moving average today, but again, I've seen crazier things. Friday is usually not as volatile, but we will see. So next up is the QQQ. Again, we are under that 21-day moving average as of the close. We were getting higher, but now after pre-market and aftermarket and pre-market, we are getting up to those 21-day moving average. Now, do keep in mind, it is declining 21-day moving average. So we still have some work to do. We have this low right here, this bottom, this new higher low, which did the same thing as the S&P 500. It came down, it retested, basically touched the same price action from previous day, and then just took off. It took off on lower volume than the day before, so we're going to need to see some volume come in here. So that's looking good. Now the IWM, this is what's looking different. It's constructive, right? We're above a 21-day moving average. We closed above a 21-day moving average, and the 50 looks like it's curling to the north side. So if we zoom out, you can see we've just been trading sideways in the IWM, and before the big sell-off, before the big pandemic sell-off, or I'm sorry, the after pandemic, this is the pandemic, this is the push up after pandemic. This is the sideways action. This was the pop before the drop. and then it trading sideways. This traded sideways and was the last to fall. Now this is trading sideways, and it was the last to actually start to head up. Now, it maybe, which would be really, really cool, I doubt it's going to happen, but maybe this thing can actually get up above all of its moving averages and continue higher faster than the rest of the markets. That would be definitely great to see for the breadth of the market, meaning not all of your money is going into the S&P 500, the 500, leading stocks. It's not, or not leading, but the ETFs, right? It's going into small caps and mid caps as well. Okay, it's not just going into the QQQ where the big tech is leading the way. It's going into the small and medium-sized caps. Okay, so it would be nice to see. It would be nice to see IWM start to move higher. It would show a lot more constructive abilities. Okay, same thing. So if we look at the Nasdaq, we can see there's 100 stocks in this. It is trending up. We are holding this area here. So it's showing some constructive ability. We still want to get above these moving averages before I am full bore bull, right? But right now we're holding that base. We're holding that base. We're making new higher lows. Unless we get a big sell-off today and we break that 500, that's my main line of resistance, guys, is that $500 on the S&P 500. If we break that area, that $500 in the S&P 500, I think that we're going to continue lower faster. Okay, so we'll see what has to happen. With the volatility, we're getting more volatility to the downside than we are the upside. There is a big chance that could happen, but at the same time, I always want to be hopeful that your S&P 500 can continue higher, because that means I'm rooting for America. I'm rooting for your 401ks. I'm rooting for your Roth IRAs. I don't ever want to see the market tank. Okay, so I do have that hope. I got the hopium pipe out. Right, we're passing it around. I don't, Dan Bob, I'm not sure if I should use that reference. I mean, it just sounds like we're a bunch of druggies. High on hope, baby. That's right, Dan Bob. I love it, dude. All right, so we'll go over a few more of these, and then I want to show you some indicators. One that my buddy had shown me that I think is really, really cool. It shows the new higher lows, new lower highs. I'm hearing my electronic vacuum sweeper. I don't know if you guys can hear that. Thing's loud. And my son's just following it around. We call him Rufus. That's our puppy. Electronic vacuum cleaner we call Rufus, It's like we're the Jetsons now. All right, so let's go over some other things. So this is SMH. So SMH is your semiconductor fund that we keep an eye on here. We are still, just like the rest of the indices, guys, like I was telling you guys yesterday, they're all looking quite similar. You get this big sell-off, you get a big pop, they smack into their 50-day moving average, they sell back off, they make a new higher low, they pull back, they retest that new higher low, and from there we're going to see if we want to continue higher or not. Next up is going to be the equally weighted S&P 500. So this is your S&P 500, but it's equally weighted, meaning not one division inside of that, not one ETF holds more weight than the other. So if we were looking at it equally, this is what you're seeing here, okay? You're seeing it just close just below a 10-day moving average. So under all declining moving averages, except for the 50-day, it's still moving up. So we're gonna see what it wants to do here, guys. Equally weighted, I would like to see up a little bit higher than this. Obviously, being below this declining moving averages doesn't give me as much hope. So now, of course, I want to look at the dollar. The dollar is heading lower. It headed lower yesterday, which I've talked about many, many times. We have an inverse correlation. We talked about it when it was back up here. It's at that area of resistance. We are showing resistance. It is starting to come back down. So that's a beautiful thing for the overall market. It's starting to pull back here. It's starting to get below a 21-day moving average. So this is nice. It's nice to see. There's that inverse correlation that we talked about. It comes down, the market goes up. Okay. We always want to keep an eye on Bitcoin now too. I never used to let this be part of the course, part of the correlation. But I like to keep my eye on Bitcoin just because the institutional ownerships are going to be keeping an eye on this thing. They are, because now it's fundedly traded. If it wasn't already somehow, some way, it is being traded by your big hedge funds. now because there are ETFs, you know, there's spot ETFs, there's ETFs with it. And then Zamora brought up gold today. So before I click on it, take a little sip there. Zamora said gold was coming down today, and I believe you are correct there, Zamora. Gold is coming down. Now, you guys remember, I don't think I need to re-say it, but we'll just do it while it's on camera. I've been talking about gold coming down. Why? Because I said the general public has been asking me about gold, and that's usually a loud indicator to me it's time to short. Why? Because if you're not here with us every day, if you're not watching this video, you're not the general public, okay? You're people that are wanting to learn, you're wanting to be here, you're wanting to better yourself, you want to know what the hell's going on in the market. That's why you're here, right? But average Joe people, they aren't trying to be a part of that market. They want to be told what to do. They're the sheeple, right? They're the people that don't, they just want, here, do something with my money, make me money. I want to be rich, you know? Those aren't the people that know hand to hand what's going on in the market. They didn't know gold's been going up since this breakout that we talked about all the way down here at this 2098 level, okay? Nobody's been looking at this going, oh, there was a quadruple top and it got tight and took off. Nobody's saying that. No. Now that it's at an all-time high, the general public goes, hey, Dave, is it a good time to start buying gold? Would you buy the ETF or would you buy gold? And that right there signifies an alarm bell. That signifies an alarm bell to me. I had to turn off Rufus, tell him to go back home. Oh my gosh, it's so loud. Go home, Rufus. Go recharge. So right when I said that, that was at my grandfather's birthday party, which was, I think, somewhere in here. Yeah, actually, it was somewhere in here. And I can't just short just blindly, guys. There's no reason for me to short right here. If it popped up here, I could short here because of this area of resistance. It's clear resistance right here. And then it broke back down. If this thing were to pop back up, maybe say in this area, right around this area, that would be a good area to get in short, but I can't just blindly short. So sure, I am bearish on this. I'm not capitalizing on it yet. When we start to see this drop, maybe it bounces off its 50-day moving averages, pops back up. Maybe that'll find me a good place to short. But as of right now, I'm hands off gold. But we usually, lately, we've seen a correlation with the S&P 500. If the S&P 500 goes up, gold was going up. But now, as of I would say the past week, maybe the past 3 or 4 days, we're starting to see that inverse correlation now. It's starting to balance itself back out to its original form, which is if gold is going down, the market's going up, you know, and vice versa. So we want to see that inverse correlation. And now, of course, Dan, you were asking about the VIX Volatility Index. So guys, let's go over this really quick. This is a very important key measurement. I call this the Fear Index, and then I got a new one that I'm going to show you today. So pay attention to this next one. Take a sip. So this is the VIX CBOE Market Volatility Index. I call it the Fear Index. The higher it is, the more fear there is in the market. So if we look at this, you can see there was a big gap up on 419. So let's look at 418 before it gapped up, okay? Here's the S&P 500, and here is 418, okay? So 418 and 419 were the highest areas of volatility, the fear index, okay? Look at this, huge drop down. So it's a complete inverse correlation. If there is fear in the market, it sells off hard. So the bigger the number or the higher the fear, the higher the VIX, the more this is going to sell off. The higher the VIX, the bigger the bounce. Remember that too, okay, guys? So let's go back to the VIX and just remember, right here is when we had our bottom, okay? When it gets ramped up, gets really, really high, moves up really, really fast, that is showing there's a lot of fear, a lot of selling, and a lot of times you'll see a big bounce in the market after that. Now, I talked to you guys about this yesterday. I have a friend who will not trade unless that volatility index reaches somewhere between, I don't know, 18 or 19. He won't even trade it until it pops up to this area, okay? It popped up even higher, and then it sold off pretty hard. Well, it didn't sell off. The volatility started to dry up very soon after that, meaning people got scared, and when you're scared, you sell, right? That's that fear. And then when it comes back down and the volatility starts to slow down, that's when people start easing back into it. They start buying back into it. Now we're below that $15 area. I told you, or I call it the $15, but we'll just use it as a marker. That 15 area, we're below that 15 area. That is that I want to see it below that 15 area, because if you look back here, if we are below that 15 area, it's smooth sailing in the market. It seems like we're continuing that bull market if we stay under that 15. But the second we start to ramp up, when we get up too high too fast, that's going to be the inverse correlation that we constantly talk about. So the VIX Volatility Index, the higher it goes, the more fear there is, the more people there are selling in that market, okay? So just keep that in mind, guys. We are heading lower. So that's really, really nice. We're actually all the way down below 14 now, guys. Below 14 now. That's a beautiful, beautiful thing. What drugged the market up overnight? I did a little YouTube short on it. I don't know if you guys watch my YouTube short. I sure hope that you are supporting your boy. But in Apple, look at Apple earnings. Now remember, we never know what's going to happen with earnings. That's why we don't play earnings. We only can play after earnings. Okay, so this was a huge gap up for Apple. Let's see, what did it gap up on earnings? Boop, it's up 6.91% with over $1 trillion market cap. That 6.9% is a big, big deal, guys. So what drugged the market up with it last night? Because you can see right here, right after the earnings that came out at 4:30. 4:30, the earnings came out. You can see right after earnings, this thing just, and look at the S&P 500, guys. What the hell? Hey, quick, Dan Bob, could you do me a favor? Let me know what the biggest earnings are going on right now. Something just drug this market up even further, which is a great sign, guys. We're up to that 510. If you guys remember talking to you about 510, that is the 50-day moving average. The 50-day moving average is now roughly 511. But we're at 510.50, so we're right below that 50-day moving average again. Now, I will have to say, I hate to be the bearer of bad news, but last time we were at this area, this is an area of resistance, so we're probably going to get a pullback from here. But Dan Bob, can you work on that for me? Let me know what the biggest... I got to take a look at my account really quick. So Tesla, it's dragging Tesla up there. That's beautiful. It's dragging NVIDIA up there. I got a pretty nice size in NVIDIA. RDNT, it's saying it's gapping up 2.4%. That's beautiful. I wish I was able to hold into ANF last night, but that's A-okay. We're a little extended from that 10-day moving average still, so maybe these can catch up. It can get a little tighter on here before I get back into that. But look at this. What a beautiful push, guys. This is why I absolutely love being here with you guys, because we can watch all of this happen together. So just keep in mind, we are at an area of resistance now, that 50-day moving average. Look at this, guys. We're above a 21, above a 30, above a 10. We're right under that 50-day moving average. Baby, let's go. Now, all we need to get is a lot of volume, okay? I am getting excited because I want to see this thing continue to move higher. I've been calling this out for days, that this is just a pullback, and as long as we hold above that $500 area, we're going to continue higher. If we break below it, watch out below. Timber, put on your lumberjack hats and get your axes out, because this could be some serious sellage. But in this situation, that $500 area held strong. Now we're popping up strong right into that 50-day moving average. So I'm really happy to see that. After I just said for us to get up there wouldn't be ideal on a Friday, here we are up there in pre-market, ladies and gentlemen. Let's go. Talk to me, Dan Bob. Oh, come on. That's not bringing the market up. That's CARV. No. Thank you. I should have knew that one by heart. Wow, Carvana's really ripping. I don't think Carvana's a big holder in... yeah, that was yesterday's. What do we got earnings for today? I'm looking at pre-market movers too. We should, no, I wanted you to look at that picture you posted in our Discord. I'll bring it up really quick. So Friday, today, it's looking like we have Hershey's, Fubu, we have Fluor, Sibo, Magna. So nothing too crazy, actually. It seems like all the wildest earnings are out of the way. So maybe this is just really, what's Hershey's ticker? HSY. Let's see how they did. They're popping up a little bit, but it's nothing crazy. Let's see how they did. So they beat their earnings estimate. They're still below a 200-day moving average, which is pretty crazy. So let me bring up something here, guys. This is something that Danny showed me this morning. He gave me a good explanation of it, too. So if you guys look at this index right here, not this old man trying to talk to you, trying to sell you on something. I'll just move him out of the way. There you go, buddy. So this here is the USHL, which is the US highs to lows. When this is moving up, this correlation moving up is showing that there are new higher lows. This is a moving average here. I'm not going to be able to explain it the best, but basically when you get a pull back, that means that there are more lows than there are more newer lows than there are newer highs. Okay, so this means these are all making new lower lows, new lower lows. This means we're starting to make new higher highs, new higher highs, new lower lows, new higher highs, new higher highs. We started to make those new lower lows. Now look at this, guys. It's starting to curl here. And if it starts to head back up, it's an inverse correlation that we're going to continue higher, because the more higher highs that we have, the better off this overall market's going to do, right? And then, of course, we have our chart here that we like to use, which also shows something similar but not the same. This shows the percentage of stocks above their 50-day moving average, okay? Now you can see that we are on our way back up to get above. We're only a few ticks away from being above the majority of stocks being above their 50-day moving average, okay? What does that mean? Well, the 50-day moving average is what a lot of your institutional ownerships use to show if a stock is healthy or not. So if the majority of stocks are above their 50-day moving average, over half the stocks are above their 50-day moving average, that's when we can have that correlation that the market is healthy. And it looks like we're heading back up into that. Now we're still below it, but we have that ability to get above there still. So that is just a correlation there. Zamora, did you have a question? Oh. Wayfair? Ah, very nice. Thank you, Zamora. And this is exactly why we like to have a collective here, because I can't watch every stock. Nobody can watch every stock. And then we got a team here, Zamora. We have a team here, and we appreciate every one of our teams. So Zamora, I don't know if you guys can hear the people in our Discord chat or not. I doubt it's recording it, but Zamora, one of our team members here who have been here from the start, brought up the fact that Wayfair, and Wayfair is in the S&P 500. If I do remember, it's also up quite a bit. She was saying, and we are up from yesterday 18%. Goodness gracious, that's really good to see for Wayfair. So Wayfair is doing really well, and that might help with the overall market as well. So good call on Wayfair. Wayfair is just underneath that 200-day moving average. Hopefully this isn't the resistance. We have some resistance over here, guys, so we got to be careful with that. So, and you can see right where I drew that line, that's just off right below these wicks, right below all of this key moving averages. You can see it's bounced 1, 2, 3, 4, 5, 6, and then I'm not even going to count all these, but this is clearly, once you've been doing this for long enough, you'll be able to just mark out your charts right where they're supposed to be, right? And then I wasn't even looking at this, but if we look in here on the daily, you can see right here the same wicks. They come up, it sells off. It comes up, it sells off. So now if it can get through this on volume, which there's a good chance that it could, maybe we continue higher. Let's go ahead and look at NVIDIA. I just want to see what we're up on this. So I've already sold like 20 or 15 shares of this. On this last piece, I'm up $267 as of right now. So I hope it can continue. Tesla, I got a really small amount in. I sold 25 of those shares. We're up about 117 on that right now. These are longer term trades, guys. I'm not even going to look at my P&L right now. Really happy with the way the market's moving, and I don't want to just sell out just because I'm up a little bit of money. We're up 92 right now on RDNT. So just this morning, what are we up? 272 plus one, 3, 4, $500. We wake up. That's a good stretch, yawn, and a drink of Monster kind of mood right there. Not to mention, we got VTI. Our long-term accounts are looking good. Our VOOs looking good. So things are looking good, guys. Things are looking really good. I like to see that correlation. I like to see the overall market doing well. But like I said, we are at that 50-day moving average. So if this is the continuation day, or as William O'Neill calls it, what is it? Help me out, guys. First one. Thank you, Dan. I freaking love you guys, man. The first follow-through day, the first true follow-through day on volume. We want to see it on volume, up over 1.5%, and above a 21-day moving average. If we could see all of that happen, boom, just on a Friday, you better watch out. People are going to have that fear of missing out and that continue higher. But remember, the last time we were at this 50-day moving average, we had a big sell-off. So I can expect market open to pull back, fill some of this gap, just like we did yesterday, okay? And there is an old and true rule too, guys. When you get a big push up like this, not a big push up, but usually the mornings in a strong market, you'll get a pullback in the mornings and it always finishes stronger. So just like yesterday, we get a big pullback in the mornings, we finish strong, right? Now, if we can continue that same correlation, that would be absolutely beautiful for this market. Another pullback in the morning, and then we finish strong. That will help me not hold on to what I have, but that will help me get into ANF like I want to get into, which it doesn't look like ANF wants to wait for me as it also gaps up with the rest of the market. But that's okay. You cannot catch them all. This is not Pokemon. So now, first I want to open it up to any questions. You guys have any questions about my overall analysis in the overall markets, whether it's the S&P 500, the VIX Volatility Index, the QQQs, or the IWM? Any constructive questions, anything? The dollar ticker is going to be DXY. I think you have to punch it in, think or swim a certain way. Let me look at it really quick. It's dollar... the dollar symbol, DXY. You're quite welcome. And look at that. Look at the dollar. We just looked at this, guys. We just looked at the dollar. So the dollar opens up a little earlier than the rest of the market. It opens up at 8 a.m. And I think that's where we got the pop. The dollar tanked. That's that inverse correlation I was telling you guys about. The inverse correlation on the dollar. Yeah, B. Stewie. He loves that aerospace stuff, yeah. Yeah, so I keep an eye on AVAV, which is I don't even know how to say it. Aerovironment. Maybe that N's supposed to be silent. He also keeps an eye on, let me see if I can't find it real quick. HWM. Oh, there it is. HWM. B. Stewie. How are you going to keep quiet about that, dude? Oh, that was yesterday. That's why. He brought it up once already. Yeah, look at that gap up. Look at that damn gap up on HWI, guys. HWM, sorry. You're going to have to maybe put that in the general chat. APBP? AV? Just put it in the general chat, so that way there's no confusion. Thank you. And I'll definitely look it up for you tomorrow. I just think sometimes you and I have communication breakdown because I suck at hearing. I suck. Yeah, you're bilingual, which, I will never, yeah, I will never, I will never ever make fun of somebody who can't speak clear English because that just shows me if you can't speak clear English, then you know more languages than I do. So I'm never gonna, it's me because I can't hear or understand you. I'm not bilingual. You're bilingual, and I think it's awesome. If I could speak a different language, I can. I speak sign language, right? But that's more universal. There's American Sign Language, there's Spanish, there's different sign languages. But if you know sign language, you can speak in sign to the general deaf, community. But anyway. Do you guys have any more questions? Talk to me before I start rambling on again. I got a bunch of crap I need to go through. We got less than an hour now. We got 45 minutes till market open, and I have a bunch of things I still want to go through. There's a bunch of stock lists I need to go through. Wow, yeah. I don't even really think I'm going to get into anything else. I think I'm just going to let what I have sit, let it trade out. Because if I did call the bottom, if I did catch the bottom, then I will be able to APTO. Gotcha. Let's do it. It's not APTO? Well, that's what you messaged me. Oh. I love that picture of you and your daughters. That is such a beautiful picture. You guys are a great crew. You guys are a great looking crew. Yeah, let's keep on pumping. Let's keep this market pumping to the north side. Let's see. There's a few things. Let's go over the high tight flags. If my screeners will pop up, APTV. All right, let's check that one out. Maybe that's what Zamora's got for us. APTV. Okay, yeah, that's a nice pop up there. My issue with it is we're still below a declining 200-day moving average, and we're right into this area of resistance. So I can't get behind this, although it did pop up on nice volume and it looks good. I can't get behind this, unfortunately. Now, is this part of the aerospace? APTV. We can read about it. So this is auto parts. So it's okay. And that's the thing. Sometimes we get a little confused, so we gotta. But it says is a technology and mobility architecture company which is engaging in the business of design and manufacturing vehicle opponents. So that's it's vehicle opponents. Yeah, no big deal. It's good to know. It's good to know. You know. Oh yeah, no, it's okay. That's why we're here, right? That's why we're here doing it together. Because if you were doing it alone, I tell you, it'd be a hell of a lot harder. I did it for alone for many years. Yeah, absolutely. Yeah, I actually always keep a pad of paper right here. I always have a pad of paper and a pen right here with me, so that way if anything does pop up, if I get a ticker, or a lot of times I get a ton of alerts going off in the morning, and I like yesterday I missed. I want to look it up. Maybe I have it on this watch list, but I had. Oh, I guess I didn't even write it. I didn't even put it on here. But guys, I was watching this high trend line on a very fast mover. I'm going to bring it up. You guys can bear with me here. I'll bring it up. It'll only take me a second. And I'll show you ASPN. I missed this. I missed this yesterday. And holy shit, this would have made my account. This would have made my whole account this year probably. Look at this. This is those. So we get a huge pop up on earnings. It trades sideways, right? It pops up here and then creates this trend line. I drew this trend line out even. And then by the time I realized what happened, I didn't even set my alert to the high of this. Okay? I'm looking at the 5 minute, but I was watching this on the 1 minute. Look at how clean this baby is. Look how clean this baby is. Right when it broke up through there, you can even see the volume when it breaks up through here. So this is what I would have been seeing right here. Okay, huge trend. It pulls down. It's getting really tight on the average, the AVWAP, not AVWAP, but the VWAP. And then look at this. We get a pop on volume right here through that average. Even if I would have bought it at this area, risking 1,000 shares, so risking what, $40? Look at this. Look at this. I'd be up over $4,000 right now. $4,000 right now, y'all. Now I'm not gonna lie. I probably would only be up maybe $3,000 because I would have sold half somewhere at this high of day. I would have sold half somewhere right here, more than likely. But the rest of this, I would just be holding until it broke its 10-day moving average, which isn't even existent right now. Okay, I would sell that other half at break even where I bought it, which would have been around 20 cents. Now I don't usually like to bring up shoulda, woulda, couldas, right? But this moves on to my example why you need to have a pad of paper here, because if you write it down, you'll remember it. You need to set your alert so you remember it. You know, because I didn't have so much conviction in this because it's a fast, low float. But at the same time, if I would have just set my alert right here, came back to it and go, oh, shoot, there is volume coming down on this thing. Maybe I should take a small bid. You know, grab 1,000 shares, risk the low of that previous candle right there. Look at that. That would have been, oh, and I would have been in the money the whole time. It would have been the easiest trade ever. You wouldn't have been able to, you wouldn't even have to worry about it coming back down. And as Lou knows, because when Lou first started in here, when I would trade, you know, the next day, or not the next day, but I would get into these low float tickers, they would start to move up, and when it would pull back, I would just say, I'm getting out for break even. I'm not going to hold on to this thing, you know, to wait and see. Because when I get in a trade and I expect it to go higher, I expect it to go higher right now, okay? And so that being said, this is the type of ticker I'm looking for. You know, anything that moves up higher and says, maybe not. No, there's not enough buyers there. There's not enough demand for that stock. Those aren't the stocks I want to be in. So I usually break even quite often on those tickers. Sure, I get it right. You know, I get it right on the first move, but when it comes back and breaks me out, sometimes it continues to take off. Other times it continues to fail. But regardless, I have a very specific strategy on these 1 minute trend breaks, right? So we got this trend break, boom, big explosion on the north side, and missed out on this trade. But it's good to see that these setups are starting to happen. You know, these setups are starting to happen, and it's good to see in the overall market. So now it's 8:52, guys. I'm going to run through just some of these lists. So we got Nail's popping up here. That's your home builders ETF. Lebu, this is biotechnology. That's popping up as well. So the QQQs are popping up. ProShares, I don't know what that is. Oh, that's just ETFs. All your ETFs are popping up. Your bulls popping up. Let's see. Advisor shares. Yeah, these are all your S&P 500 ETFs. Let's see what B Stewies can look at. Yeah, let's take a look at GE. B Stewie, just not GEJ, but GE. Look at GE. So Zamora brought this up to us yesterday, guys, and GE is looking very, very good. The great thing about GE is that it does really well even in market pullbacks. So this is looking very, very strong here, guys. Very, very strong. She brought this up before. One thing that I wanted to bring up that's a solid trade idea is if we just draw this, right now it's breaking up above its base. So this might be a nice trade. And for as big as GE is, it moves 3.4%. So it's a lot quicker than I would have originally presumed GE to be, okay? So your first area that you could have taken out was this beautiful base right here. This beautiful base broke up above it, and you could have risked the previous low, which would have been 152. It broke above this area and then pulled back, and now is trading within this next base. So if you were to play Darvis is his name. He's the one that his book is How I Made $2 Million in the Stock Market. And at that time, $2 million in the 60s or 70s, he was a very, very rich man. Now, he would draw these boxes. So he would say, this is your first box right here. And he would say, now this is your second box. And if it breaks above this box, he adds to it. If it breaks below this box, he sells off. Okay? So if you guys want to take a trade like this, you're more than welcome to, as long as you use risk management like Darvis did, or like I do, like anybody that should be in here should be doing. But that's a box method. That's Darvis's method of trading. And yeah, this looks really good. I really like this. And it looks like it's starting to break out with the rest of the overall market. You can even see too, on these push-ups, you get higher volume. And then when it starts to sell off here, you can see it's on lower volume. Okay? Higher volume on the push-up, lower volume on the sell-offs or the sideways action. So now this next push-up, if it breaks through, it'll probably be on higher volume. So just keep an eye on all of that. GE 3.4%. And yeah, Zamora, great idea for bringing this up yesterday. B. Stewie, great follow-up for sure. It's definitely one that we would want to keep an eye on. Looks like it's HWM. Yeah, we were actually looking at this a little earlier. This is that aerospace. It's in correlation with AVAV, like I was talking about. These are looking like leaders, guys. These are definitely looking like leaders. Oh, is it? Yeah, the after. Yeah. Yeah, so very good. Very good. You better get better handwriting or you're going to end up getting called a doctor. Hey, I'm a little slow too. So if we work together, we're going to be at this. Moderna. So I know PFE had a nice job on earnings. They popped up. Moderna, is that mRNA? Okay, I remembered correct then. Yeah, so Moderna and PFE both popping up. So this actually looks really good. So if you guys look at this, this is another one of those base breakouts right here. We wouldn't have known that this was going to base breakout because of earnings, but it did show a lot of correlation. Again, we don't take trades before earnings, but now that it's broken above this base, unless you have a strategy for this, I won't be able to take this. But it breaking above, actually it had earnings in pre-market and then it broke out in the morning. So actually you could have taken this base breakout. That would have been nice. That would have been a really nice base breakout. Yeah, there's a lot going on here, guys. But I tell you, the market is looking pretty hot right now with all of these things going on. And it's not selling off very hard or very fast. Hell, we made it above that 50-day moving average for a minute there. That is actually really beautiful. Did we? Hang on. Let me just reinstate that. We touched the 50-day moving average, exponential, okay? I'm using simple moving averages now down here, but I'm using exponential. This is a simple moving average. I use simple moving averages on my 50 and my 200. I use the exponential moving averages on my 30, 21, and 10. The reason for it being, a good stretch here. You probably got to see my ugly stretch face on the... You can't see it, but because I'm recording on my, yeah, no, it's okay. You get to see if you rewatch this, you'll get to see my ugly stretch face, Zamora. I gave a big stretch and I'm staring right into the camera when I did it. So, all right. Anyways, let me get back. let me get back into it, guys. I want to make sure we go over. Let's see, Adam. Any good EPs, bruh. We got to look at the EP setups really quick. All right, we got LOCO. That is looking pretty damn good, actually. LOCO. We might want to keep an eye on that in the morning. That's up 23%. Tomorrow is Saturday. It's going to be a good day today, bro. It is. No matter what happens in the market, it's going to be a good day. We got WOW, but I don't like that because it's under the 200-day moving average still. AXTI is up 20. Yeah, guys, there's a lot of gap ups this morning. AXTI gapping up as well. I don't like that. Oh, that's pretty beat down, but it's not looking as pretty. ARDX curling up and then gapped up. OSPN. I'm going to have to reach out to my buddy Danny. He's better with these EPs. Stand by. Yeah, if you guys can't hear the greatest moderator alive, Dan Bob Dan, when we go on hold, either when I use the restroom or when I got to take a break, or he likes to bring up topics. So when I say, hold please, he likes to bring up a topic. Dan, that's up to you, man. I think I think you guys have been around long enough. You should know some bullshit topics to bring up. Oh my gosh, you're killing me, bro. That's actually a really good question. Why do we drive in driveways and park in parkways? Yeah, it should be, right? Walk in driveways? Huh? OPEN. I'm not even interested in these gap ups though. I guess the only thing that looks good to me is this LOCO. LOCO. It's been beat down under its 200-day moving average, and now it's gapped up. That looks really strong. Let's take a look at LOCO. Let's see what kind of sector this is in. LOCO. Maybe we take a small trade on this. So we got LOCO. El Polo Loco. It's a consumer service, as we know. Consumer service. You know this one, Zamora. Oh, I like to hear that. So we love the food, she says. Now, if she didn't already give it away, it is a restaurant. And I've been telling you guys, the restaurant business is a hot sector. So let's continue to look at this. It looks... What's that? L... Zamora, one more time. It's down? Yeah. Right, but the earnings came out. They had an expecting beat by double. Their financials are in line, and now it was beaten down. Okay, and now it's popped up above a 200-day moving average, above its biggest area of resistance, and now it's right here trading at 1065. So if it's in a hot sector, okay, and what kind of food is it? So is it like a Chipotle, Zamora? Okay. It's Loco what? What is it called? We're going to go back. Okay. Well, this is what we're going to do. If you guys want to look at my screen, we're going to go to their website. We're at their website right now. Let's take a look. Let's see where they're at. Well, I think I got to punch in like where I'm at in order for me to go through. So an EP or episodic pivot is going to be, it won't even let me look at their menu without like telling me where they're at. Yeah. Look at that piece of chicken. You think that's actually real? Or you think they did this for the picture? Look at these meals. What do you guys want to eat? I'm ordering. I'm ordering. Yeah, forget about the stock market, dude. We're gonna smash on some food, bro. I'm hungry. Look at the bowls. Yeah. I'm just doing my homework. Hey, I'm just doing my homework. I'm hungry to make some money. So if Loco is good, I think we're gonna do an EP. So here, I'm gonna tell you guys how I play it. And remember, these are my ideas, not yours. So what we want to know is how fast this thing moves. First of all, it moves 2.8%. So it means it's a slower mover, but we need to understand when you get these episodic pivots, if it is a true episodic pivot, I like to call them gap up continuations. So that way there's no confusion with Chris Quilamagi's episodic pivot, okay? So this thing is up 23.26%. It did have a earnings beat by double. The financials are in line. It does look pretty good. So this is lining up on the more, and it's been beaten down, okay? So it is looking like an episodic pivot. So now when we talk about episodic pivots, we need to know how to play those. So we need to understand how we use the risk management, right? We always want to know the best ways to get in. So I'm still just doing homework on the side. So what I like to do, which guys, we have a little less than 30 minutes now before market open. What I like to do is I like to watch this thing on two different time frames, the 1 minute, and I like to look at it on the 5 minute. All right, so first off, let's bring up, I'm not trying to get sidetracked, but I do want to understand how much volume this usually gets traded, okay? So we have a market cap of 268 million, which is very small. We have an average volume of 306,000, and it's already traded more than its average volume for the day already in pre-market. All right, so when we look at this thing, let me see. Yeah, the pre-market volume, well, actually, I'm showing 26,000 on this. Current volume multiplier, 1.12. Yeah, so I think it's actually traded all of its volume already today. 20-day average volume, 308,000, and it's traded its average volume already. So 166. Yeah, see, I don't understand this. I added a new script and I'm trying to understand it. It doesn't make as much sense to me as it probably should. But anyway, I'm going to tell you guys how to play this, okay? So this is how I'm probably going to play this. I'm probably going to use small risk just because I already have a lot of my capital out in Tesla, NVIDIA, and RDNT. And my Abercrombie and Fitch trade is taking off without me. So when you get a stock like Loco, and if it opens up on the 1 minute candle, all right, let's look at the previous day's open. All right, let's just look at Tesla. Okay, we'll look at Tesla on the 1 minute opening. Okay, from today, from right here. All right, so we don't know what's going to happen. We have no idea what's going to happen, right? So here's the first candle. It opens up. This is horrible. So this is the 1 minute candle. It opens up. Here's your first minute. This is showing your high and your low on this 1 minute candle, okay? So the next candle to open Okay, if it breaks this high, that's where we're going to get in, and then this low would be where we would exit. In this case, we would never get into Tesla on this. Okay, so say this is this is Loco, and we get all this trading volume, and it opens up and it moves up on the 1 minute candle, and it comes back down until it breaks this 1 minute candle to the north side. We don't get in. Okay, let's say it does break that open 1 minute candle. Let's see if we can find one that doesn't. Let's see. All right, so here's Tesla. It did have earnings. It broke out. So let's see if we can actually play the morning open here. All right. So this would have been a loss if you would have played this, okay? This isn't an episodic pivot, though. But look, it opens up. It makes your 1 minute candlestick range, okay? It breaks up above. It just breaks up above. You enter this, you would exit here. So this would have been a loss, okay? All right. Let's look at the next day. All right, so here's a cool one. All right, so we're gonna imagine that this is an episodic pivot, so we can learn how to play. This candle opens up on the 1 minute, and here's your first candle. You have your high, which is 158.98. We'll just call it 159, and your low of 158.40. Okay, so you have a $1.40 risk, which you take the $1.40, you multiply that by however many shares you want to get, and that gives you your dollar amount in risk. Okay, so if we buy 100 shares, that's $140 we're risking to this low. Then the next candle opens up and it breaks this high. We buy those 100 shares, risking $140, and look, it never comes back. Okay, and it never comes back. And from here, if you're risking from here to here, your risk is that $1.40, or you can call it 37%, 0.37%. By the end of its closing day, let's zoom all the way to the end, it's up 11.39%. Okay, so if we take 0.37 and divide that by 11.0, that's going to be, I probably did that wrong, didn't I? Let's see, 3693. So that's going to be 3, 6, 9, 10. You're going to be up. Oh, wow, you're going to be up a lot. Let's just put it that way. If your risk was this small, let's just call it a 0.5%, right? You're going to be up like 20R right there. It's a huge win. That's a huge win, okay? Now, I'm not saying that that's what's going to happen with Loco. I'm just trying to give you an example of how to play it. Now, on the same hand, that is going off the 1 minute. You can also play this off the 5 minute or the hourly. But I always like to make sure that if your average daily range is 2.8%, that your risk is within that 2.8%. Okay, so if we go back to Tesla, and let's say it opened up here and it's 2.8%, and you wanted to get this break and you pull this down to the bottom, that's 2.65%. Okay, so that's within your range. You could get it, right? Did I say 2.8 or 2.3? I can't remember. But you want your risk to be smaller than your average daily range. Does that make sense, guys? Okay, good. All right, I want to go back over my trades really quick. Let's see how we're doing in this. So Tesla's rip tater chip. That's a beautiful sign. Let's see how NVIDIA's holding up. NVIDIA, wow. That's a beautiful sign, guys. That's what I want to see. Oh yeah, it's above all of its moving averages again. It's right into that resistance area, so it might open up and fail here. It wouldn't surprise me, honestly, if that's what happened. I will say, for being pre-market, it is up pretty well. But it wouldn't surprise me. We're in resistance in a lot of these key areas, meaning the 50-day moving average. So this big pop-up could be met with some selling action, or it could be met with that fear missing out, where people are going, holy cow, we missed our chance, we missed our opportunity. it's time to buy, buy, buy. Just like in sync, right? Buy, buy, buy. Okay. So we got, so let's go over the indices one more time. So the S&P 500 is at 510.35, right into that 50-day moving average, as the QQQ is going to look very similar. The IWM that was speaking to us doing much better above its moving averages, is now above its 50-day moving average. And as we spoke about it before, the 50-day moving average is curling to the north side. So all of that is looking very constructive. It's all looking very, very well. Okay, so let's go ahead and keep all that in mind. Things are looking really good, guys. Really good. It's really enjoyable to see. Yeah, let's take a look at Microsoft. Actually, now that you brought Microsoft up, Microsoft is doing well. Look at that. So Microsoft, is that above a 21-day? It's still below declining moving averages, but it's good to see Microsoft pop up there. Is this the pop before the drop? Things are seeming a little too euphoric right now, which makes me a little nervous, guys, to be honest. Let's go through all of them. Yeah, we'll go to Netflix. So Netflix. So guys, if you guys remember yesterday, I wanted to take a short right here for this breakdown. I shorted it. We were up like $150, and it came right back up and stopped me out. I tried this thing like 3 times. I was down $100 yesterday. I said, "Why am I fighting this thing?" You know. So then it actually turned right around and headed right back on up. And so after it broke out of this area, it has not stopped. It has not looked back, and now is clearly way up here. So it is having a nice little pop. So Netflix is looking good as well. Let's take a look at Amazon. So Amazon, look at this. Amazon's out of its murky waters again, guys. This is what I was telling you about. If we can get above this area, you know, I was telling you it broke down here and then it went right back into its area of resistance. If it comes back down again, that's going to look really, really bad, just like XOM. Remember, it broke down below, it came back up into its resistance, and the second we started to fail, it looked really bad and then headed lower faster. Well, this didn't do that. It popped back up, it held, and now it's above and heading higher than all of its moving averages. So Amazon is looking very, very strong in this market. Let's take a look at Meta. Meta is below all of its declining moving averages. It had a nice little pop this morning, but it's still met with its previous highs from yesterday. It hasn't even broke above those yet. So Meta's not looking like the strongest stock in the market. But Apple, up that 7.10% right now, is looking very constructive. Still below a declining 200-day moving average. Actually, let me double check that. No, I'm sorry. It's above its declining 200-day moving average. So it'd be nice to see if Apple can continue to the north side, because there is a lot of people in Apple. When I say people, I mean indices, ETFs that are in Apple. And so getting that pop there is a good sign for Apple. Google, guys, Google had a nice move yesterday. It started to curl. It's being met with this 10-day moving average above all moving averages. We were telling you that Google is the leader, and it has been the leader throughout this whole pullback. Google said, no. You go ahead and hold my beer. I'm going to hang out up here at these highs, and we're going to keep on keeping on. Mara, look at Mara. Mara actually had a nice little, actually it's got earnings coming up here too, but Mara got a nice little pop from all of that as well. But I have a feeling Mara is going to tanky tank with its overall. Look at Snap. Snap just snapped right on up. I mean, it looks really, really good. The issue is we do have this overhead resistance. I still use Snapchat. I don't know if you guys use Snapchat, but I figured at this point it would be dying. But it does look like it's starting to head higher. Maybe with this TikTok BS that's going on, it will continue to find more popularity and more users. But honestly, what's that? Big money has tied into it. Oh, they monetized it. Oh, they've been monetized for a long time, dude. They've been monetizing Snapchat for a long time. Oh, okay. Yeah, that was like last year, Dan. Yeah, you could. Oh, did they? Okay. Well, I know with when AI started getting hot, they added where you could buy, Snapchat Premium. That was last year. They added so you could like buy your streak back. So if you missed your streak the one day, you could pay $1 to get your streak back. They added a few other things too, so you could customize your look of your Snapchat. There's a bunch of stuff with Snapchat that they're doing. So they are making money now. The past 3 earnings seasons, they have been quarterly been making money. But I don't know. Maybe it's a good buy. Maybe it's not. I don't really know. XOM is continuing to pull back here with all the hype and the correlation that we had before. We're not seeing any more push with XOM. We talked about this triple top and it got broke above. And I said, if the market's going to pull back, this would be a good place for a lot of institutional ownerships to park their money. And that, gold and energy is hot. It was hot. But what happened? What happened here? Well, now it looks like this breakout to new highs did not sustain. It made a trend but never broke it. It followed back up through, broke down, popped back up into that resistance, and now is starting to fail. So I think XOM has a very easy chance to come down to at least 111, maybe not even all the way back down to this 97, this $100 area again. So that's going to be slow and easy going. We tried to take a long in this once. We made a little bit of money before it pulled back and stopped the rest out for break even. But it looks like oil, for the sake of everyone's pocket, is going to head lower. Same thing. Usually this is same correlation. This is light sweet crude. We have Kathy Wood's ARK Innovative Invest Innovation ETF, It looks like it wants to get above that 200-day moving average. With only 9 minutes left to go, guys, I did it again. We need to go over some of my watch list, damn it. All right, let's go through these. So HWM looking good. AVAV looking good. AG, so I believe that's silver. I am bearish on silver. We had a nice little pop from that. I can't tell you how bad. I just want to short the crap out of this thing right now. We're just going to keep an eye on it, though, because I don't think it's the best opportunity. SoFi got a nice pop with the rest of it, but there is no liquid in SoFi. It's just not trading fast enough for me to want to get into this. Plus, it's below all of its moving averages. The 200-day is curling. I think this thing's going to fail. I'm going to take this off my watch list right now, so I'll have to look at it again. A-Lab looks like it's being constructive. Back down here at this base, actually, this looks really, really nice for A-Lab. This might be a great opportunity to get in, honestly. Let me zoom out here for the hourly. Yeah, it looks like I just missed my opportunity. We're off by a few dollars here. And plus, earnings is just in a couple of days. That might be episodic pivot coming up here. NVIDIA acting like a leader back up here in this area of resistance. I'd love to see this thing to just break on through, make new higher highs. Obviously, I have money in this, so I obviously don't want it to ever pull back. I want it to go straight up to the moon, make me a millionaire. That way I can afford my energy drinks or maybe a coffee pot. Let's see. Next up is Wing. So we got this big pullback for Wing. I did not get my opportunity or my chance to get in. Maybe this will be my next opportunity, but I tell you, I'm definitely keeping an eye on a Loco for this. Keeping an eye on Loco for this opportunity. So we have Wing, we have CMG, which are all looking very constructive in this hot sector. Sweet Green did break below its 50-day moving average yesterday. We have Sweet Green's earnings coming up in a couple of days, so keep that in mind. Kava's looking good down here, bouncing off of its 10-day moving average. This is a nice cup with a handle, so if it wants to get and break out above this area, that might be a beautiful breakout for me personally. I think it's going to take multiple days, if not weeks, for this to happen. I think that would at least look more constructive for Kava. If it bounces off the 72 multiple times, gets really, really tight here, and then breaks on higher to the north side, that would be nice. Of course, I like to look at STTK just because I held a lot of shares in this, and I was too big of a chicken to hold it overnight. And it looks like that was probably the right thing to do, is to get rid of that. It's starting to chop around, lots of wicks up top. Now, Hood had a breakout on its daily, so it is looking very good, very constructive here. And as, I don't know if you guys are aware of this, but Coin had a nice, well, I guess I thought it was nice, but it wasn't that nice of earnings. But Coin's looking like it's trying to break out of this area too. But Hood looks a little cleaner to me, personally. Hood looks a little cleaner on that. RENT, yeah, rent's really beaten down. It's below a 200-day moving average. It's not something that I really want to look at right before market open in 5 minutes. So we can go back over that later on though. Maybe this weekend. CPNG is still acting like a leader. I don't believe in Coupang, but it doesn't matter what I believe. The market's going to do whatever the hell it wants to. So Coupang is holding up here. It held up during and held sideways during that whole correction in the market. But we're going to see what the market wants to do here. Earnings is just in 3 days in Coupang. So I believe it's on Tuesday will be Coupang's earnings, which will be interesting to see where that takes us. CRS is still ripping to the north side after earnings, so that was a beautiful move higher. FIP, yeah, I kind of wish I would have taken this trend break here, but the market wasn't looking healthy enough for me to want to start taking trend breaks, so we're not playing that. Easy PW had earnings. This is why we don't play earnings right here, guys. This thing took an absolute dookie, dropping over $2 on a stock that usually moves 3.2%. It moved much, much quicker. Affirm, so right here, Predator, if you remember, I had an idea on Affirm on this daily trend break. You can see it is working out beautifully. This is the daily trend break. It actually broke out above it. I didn't even have my alert on this. I actually played this to the short side here, made some money, and it popped back up, and then here we go. It's ripping to the north side. I would like to see this thing get up to maybe somewhere around right here for another short before we continue back down to the sell side. So we're going to let Affirm work out, but I think Affirm eventually is just going to fail. We have UAL, which had a nice pop back up off these moving averages. It finally made it to that 10-day moving average that I talked about. Of course, I did not take this full trade. I got spooked out. Here, exited, got back in, made some money, exited, got back in, made some money, exited, got back in, made some money. When all I needed to do was be the big fish, play my actual trade, hold that short from all the way up here, make my $3,000, and then get out. Instead, I had to make roughly, I don't know, $1,500, half of what I could have made if I would have just held out and stayed true to my my trade. Instead, I let the market spook me out multiple times. So that is that with UAL. We did good, but we could have done better, and you're a loser unless you're learning. Always remember that, guys. You're a freaking loser unless you're learning, and I'm learning every single day because I definitely don't want to be branded as a loser on this channel. ANF looking good. We got that daily trend break. Of course, I want to get into it, but I think with the morning, I don't want a morning pullback, but I'm telling you guys, with the euphoria that I'm feeling in the overall market, I'm expecting a pullback in the market. So we got 2 minutes left to go. Remember, these aren't my buy or sell recommendations. If you guys hear me talk about alerts or anything going on, that is going to be mine. Those are going to be my alerts. Those are going to be my trades. Okay? So keep that in mind. I think I'm going to end the Discord recording here. So I hope you guys learned something. This is how we do the market open analysis. If you want to be a part of it, hit that like, hit that subscribe button. Make sure that you join our Discord. We do this for about 2 hours, let's see, 8, 9, well, an hour and a half before the market open every single day. And then we were going to start doing this in the near future, probably within the next month. We'll be doing this at night to get everybody prepped and ready to go over what happened throughout the day, and then coming back in at night to see what actually what we have in store for the next day. Okay, so thank you guys, appreciate you, and we love you. Bye bye.